Welcome to .Connect Africa's Web Forum. We hosted our third Crisis Management Conversation series on the impact of COVID-19 on SME financing. This web forum was chaired by Sophia Bekele, the CEO and founder of DCA Group. Our panel of speakers discussed the real effects on the ground for SMEs, the plans that are being implemented to curb further negative effects on the market, future strategies that organizations can rely on to remain resilient and afloat, opportunities and methods of enabling new growth, and predictions of the paradigm shift for SME financing. I will hand over to Sophia Bekele, who will take it from here.
Well, hello everyone, and my co-hosts in Kenya as well. My name is Sophia Bekele, and I'm your host today for this virtual session from .Connect Africa Group, also known as DCA. And I'm speaking with you from California at about 1:30 a.m. This shows my commitment to Africa, and you guys are coming to us via tech from another side of the continent. There are a few people from Africa and also some from Europe, and thank you all for gracing us with your presence. I think most of our contributors today are familiar with the work of DCA, but for those of you who are not and listening in, I will be very brief so as not to take from our valuable time, as our body of work is available on our website. So, having said that, DCA is an organization that started its work in Africa a little over a decade ago, in about 2007 to be precise, and it's famously known for two things. One is it set out a mission to brand Africa on the internet, particularly in empowering the SME sector, small medium enterprise, which is the heart of DCA and also the topic of our conversation today. This early period of our mission was also marked by a time that Africa was also struggling to get its brand name in the global space. Therefore, DCA ran a highly acclaimed, innovative, and successful Pan-African campaign, namely Yes to Africa, that branded Africa and its identity on the internet. The second thing we're known for and passionate about is uplifting women in the knowledge space. Thus, we pioneered the first Pan-African women intake space in Africa, namely Miss Africa Digital, and we think beauty and brains should not be an exception but the norm. That's why we called it Miss Africa Digital. As such, we have presence in 12 countries of Africa, and we managed this just in the past few years through our Seed Fund Award program, which helps women-led startups in the technology sector. This is done in collaboration with the DCA Academy, an educational arm of our initiative, also the sponsor of this web forum. Needless to say, our impactful work in Africa has received many accolades and awards for our work by the African and global public. As we gather here today, it seems like Africa has a daunting challenge at this period with the COVID-19 pandemic, as the numbers for positive tests are also reportedly increasing recently in Africa. Kenya also extended its lockdown for another 1 month now, and other Africans have also followed. However, from where you are all sitting, you will be seeing the reverse, I suppose, with us in the US. What we're weathering now and its contagion to the rest of the world. Therefore, we're facing many overlapping issues, particularly this moment in the global pandemic, as the situation was also exacerbated with the recent event and the brutal killing of Mr. George Floyd that sparked the global discussion on racial and economic divide. This has also a lot to handle at a time in this world. I've seen some television videos from Kenya where there were demonstrations at the US Embassy, I believe, regarding this. I think Europe and Asia has followed with similar demonstrations. So all to say that we have a lot to handle aside from the COVID-19. However, all that said now, the topic of today is how is SMEs impacted in the financing during this unprecedented tension as a result of the COVID-19. So our team here at DCA thought we will contribute to our part by having a crisis management conversation series to get some insight from business leaders like yourself in a sort of roundtable discussion on how to steer the ship to the shore or what this new normal would look like. So that's why we're here today, and this is our third series of conversation. Under a hashtag campaign we launched called YourSay YourPart. The others that we discussed included working from home and then e-health solutions in Africa. So let me introduce the esteemed panel now by sharing the screen from our side. I think it's easier than asking you to raise your hands. So I'll start with Michael. Mr. Michael Monari, CEO of Longitude, financial service provider targeting SMEs. You're also a former executive with EcoBank, one of the largest branch networks in Africa with 1,300 branches in 36 countries. I have known Mike for nearly a decade when I was campaigning for Branding Africa and had pulled you in my advisory board, I recall at some time, but you've now moved on as a star entrepreneur and to more important ventures. Thank you so much for accepting my invite and coming. And then there is Mr. John Kariuki. He is a Group Chief Executive Officer and founder at FinCredit Limited and also board director at the Association of Microfinance Institutions of Kenya, AMFI as it's called. And thank you, John, for gracing us. You are also one of the business leaders I admire in Kenya, particularly your passion for the SME sector. I think I recall you gave some interview to CNN London in a value of branding domain on your sector in support of our campaign. So I've known you that long, and thank you for showing up today. And here goes Miss Pamela. I think you pronounced your last name Juguna?
Juguna.
Fantastic. I did. Excellent. That sounds like an Ethiopian name, actually. So Miss Pamela is the head of business and marketing, Credit Bank Kenya, one of the key banks that lends to SMEs. She's also worked with other leading financial institutions and has a wealth of expertise and a strong understanding of the various markets throughout the business sector, especially in the SME area. So Pamela obviously keeps her career on top priority as she was named recently as a girl boss by Business Today Kenya. We're very proud of her. Perhaps you can lend some thoughts to our Girl Squad team at DCA. And then let's see, Erick Young. Erick is the able gentleman from West Africa and Europe. He is the CEO and co-founder of Green Tech Capital Partners. That's a great name, I like it. GTC, as it's called, is a new kind of impact capital venture and has worked with startups, global strategy, and business development. We recruited Erick at the renowned Euro-Africa Summit, a yearly summit in Portugal at one time, I remember, and I was on the advisory board. That's how we met. So Erick is well known for his efforts in the biotech sector. He's also a specialist in international marketing and implementing brand strategies, marketing plans, and communication campaigns. So these are my esteemed panel and my direct recruits. So welcome. And I will go to the topic now. So to give some perspective to our topic today, Africa has the world's most exciting economic frontier, offering hope to new generation of accomplished and engaged youth. According to the International Monetary Fund, by 2035, the number of Africans joining the working age population will exceed that of the rest of the world combined. Small, medium enterprise create about 80% of the region's employment, thus establishing a new middle class and fueling demand for new goods and services. Unfortunately, this COVID-19 pandemic is predicted to have a strong effect on labor markets worldwide, especially in developing economies like Africa, where more than 70% of the workforce is in self-employment or work in micro and small enterprise. I know for sure in the USA, it's been a disaster for SMEs. So this will also disrupt many existing value chains that most likely would in turn lead to loss of income and sharp increase in unemployment. Therefore, let me pose the first question to Mike. Mike, you are the CEO of Longitude Finance. It's a financial services provider. What can you tell us on how the pandemic impacted the small businesses in Kenya, and what has your firm done so far about it or to survive it? Your say and your part.
Thank you very much, Sophia, first of all, for inviting me to this forum at a very trying time. So By introduction, just to add on what you've already said, is that Longitude Finance is a financial service provider targeting to support SMEs, mainly in capacity building, trying to ensure that they at least have the knowledge on how to run their businesses. And then we have also raised funding to support the SMEs. Like you rightly mentioned, the SMEs comprise that big percentage of 70% plus, at least in sub-Saharan Africa or all the emerging countries, and they're the largest employer. So on the other side, when you look at the normal commercial banking platforms, especially due to various regulations, the SMEs are not very well supported by commercial banks, obviously due to the various regulators, the regulations that the various central banks have come up with. So having had that experience across the continent in Sub-Sahara, I said, let me also come out here and give back by putting them together and coming out, working with partners to generate both capital in supporting those that obviously the banks, due to either lack of collateral or other requirements that regulators need, they can't be able to fulfill. And that is what we've been doing. So the pandemic struck and the SMEs were the most affected. Most affected in the sense that quite a number of them survive on what you can commonly call as your hand to mouth. They do not save, they don't have ability to save where they can turn to and maybe survive on that for some time. So what it has meant is that they were all traumatized to the extent that quite a number literally were on the phone throughout trying to say what happens, what next for them. And that is crowned by the fact that, as you know, most of the African governments, of course, Kenya is not an exception, they don't really have solutions that can be rendered to the SMEs as were thrown out of business. Luckily is that the lockdown hasn't been that too long, and a number of them have tried to get back, and we've turned to support them by either refinancing to add to their businesses, that they continue to do what they're doing. Some have come with various inventions in terms of finding out that what are the key industries that have just emerged. If you look at what's happening now, when you walk through the streets, you will notice that the related activities of, say, sale of the products that are now being used, the masks that you see around, the sanitizers that you see around. So people have had to reinvent themselves, but by such a time that this was coming up, they had already exhausted any capital that they had for the businesses that they were running. And hence, as a financial institution, we stepped in to at least boost them or restructure the facilities they had in order for them to at least engage in economic activity. A number of them that were also caught up in terms of not knowing how to realign, we have had to hold very long sessions in our capacity building unit, trying to advise them that you need to diversify, you need to change, you need to look into what is going on so that you can fit in there. And many of them have gone into that. A number did not appreciate a platform like this, using technology, Zoom and other communication platforms to do their businesses. So quite a number have embraced that. And you can say that for the last couple of weeks, people are trying, the small businesses are getting back slowly and steadily and constantly being guided by ourselves and, of course, like-minded financial institutions to try and get them back to business. I think that's what I can say, what contribution we just made so far after that impact. Thank you.
Thank you, Mike. The curve started very low, but it seemed like a bit of a positive impact there. Let me just welcome John. Ngumi, how are you?
Very well. My apologies. I was on a call with somebody whose name I can't mention, but I could not say no to him. And John Kariuki, don't say anything.
Hi, John. John Ngumi, welcome. How are you doing?
Very, very well.
Good to hear from you. Thank you for joining us. Let me just introduce you because I've introduced everybody else on the team. So Mr. Ngumi, he's currently an executive director at the Eagle Africa Capital Partners Limited. I also love that name. You're also the chair of the Kenya Pipeline Co Limited. Today, we want to pick your brain on your long-standing involvement in the banking and investment sector. You have worked variously for Barclays Bank, Citibank, Grinsley Bank, National Westminster Bank, and you were former director of Standard Bank as well. So wow, you're also a highly visible personality in Kenya as it relates to advisory boards. You become the person of interest to me when you had a short stint at a leadership position at Konza Tech Park, I remember, a project. Yeah, and I was then chasing after tech opportunity. Thank you very much for accepting my invite. So I was asking Michael what the impact of the SMEs is on the floor in Kenya, right? And he was responding to that, how they're impacted by the pandemic in your organization. Have you stopped any new deals until the crisis eases off, or have you continued with business as usual?
I'll speak with a couple of hats on, but let me start with a statistic that was given by the chief executive of Safaricom, Kenya's largest mobile operator, who operate M-Pesa. And he told me that in the last 3 months, they have seen a very sharp drop, nearly 40% in M-Pesa transactions. And that because the bulk of their M-Pesa transactions are C2B between customers and companies, and the bulk of the companies are SMEs. That translates to him as to being a sharp drop in SMEs business. And indeed, he was quoted last week, and he repeated it to me on Saturday, that they are going to go out and try, as Safaricom, to specifically support SMEs, not only in giving them a business, but also in advancing payments to them or advancing money to them to go into operation. So it's been pretty tough. Wearing my Kenya Pipeline hat, we have got a big involvement with the SMEs. Our recurrent budget, which is almost all supplied by SMEs, runs at about $40 million a year. And they also do a significant part of our capital budget, which runs at about $100 million a year. We have tried and really have gone out of our way to ensure that we do not stop buying from our SME customers. We've also continued our partnership with the likes of Equity Bank and Absa Bank and others who provide advanced financing to SMEs against our commitment to pay monies directly to them. What we are seeing is that they are struggling, and they tend then to rely almost solely on us as their source of business. Wearing my other hat as chairman of Wananchi, which is the top home fiber in Kenya, our business has tripled and continues to rocket ahead as people work out of home. A lot of the work that's done for installation and repairs, we have had to hire more people running their own companies to help us continue servicing clients. And I know we've had service challenges, and so we are one of the few people who are actually in desperate need of more SMEs to come and work with us, not less. So I've given you two contrasting pictures, but the reality is that SMEs, as I'm sure my colleagues have said earlier, have been hit hard. If companies like KBC, which have the liquidity and the muscle to be able to help out SMEs in this time, as people like Safaricom are trying to do, it behoves us to do exactly that. They are suffering. Hope that gives you an inkling.
Yeah, it looks like once demis is another opportunity. So,
Yeah.
like you said, the Wananchi and the online companies will definitely, and probably e-commerce and so forth, you would see their profits ramping, and then there's the other side of. Thank you for that. That's a real life example you gave us. And so the work from home strategy, I don't know if it's going to work. Probably let me just ask a pointed question on that. Do you see like any new business investment ideas arising out of such crisis from work from home or that sort of thing, John?
I am absolutely sure that it will emerge. At Wananchi, for example, we've been asked and have added channels for education and religion. So there are people who our audiences have demanded, and there are people who have come up with new businesses targeting specifically education and religion. So I would say that at least in those two areas, we've seen businesses emerging. Of course, Kenya has just dealt online commerce a blow by imposing a tax on it. How quite they will collect it, we do not know. The timing could not have been more unfortunate.
Yes. I heard about that digital taxing issue.
Yeah.
Should be, you guys have to fight it. It's not fair.
When governments are in need of money, they will tax whatever
That's it, huh?
moves.
Yeah, I think they're 10 years ahead of the economy now, when I was thinking of the tax advisors there. So let me revert to John Kariuki now. You are the group chief executive or officer and a founder at FinCredit. Also, you are a board member on the AMFI. So, as an FSP, you're also considered an FSP. Is there a clear time for survival rather than profits at this point? Meaning, is all hope lost for any recovery in 2020? And if so, what do you predict will be the ample recovery period? What's your general assessment of the
thank you, Sophia.
The challenge and the recovery?
Firstly, I want to say hello to Pamela because Credit Bank is our principal banker. So the definition of an SME, sometimes we tend to think of SMEs as just the micro businesses, but you know, they vary from, I actually don't know what in terms of turnover or capital base, where a medium enterprise ceases to become medium. At FinCredit, we've been on the top 100 medium organizations for a while. And so we are actually an SME. So as we talk about lending to SMEs, we also look at those who can lend to us, like Pamela. What we have seen though is that after COVID, businesses are affected differently, and I'll tell you why. We have our subsidiary in Uganda, and you had 13 branches. They go out and originate loans in the rural areas. It's a very different business model. So that business was paralyzed because you could not even get on public transport. You could not use private cars, and it's been going on for quite a while. Now, in Kenya, where we are a branchless model, all our loans are through the mobile platform, and our customers are able to access loans. Now, fortunately, and it's just a coincidence. In our books, and Pamela, you'll be glad to hear this, most of our customers are actually either insurance premium financing, where you got guarantees from insurance companies, or it is pension checkoff, government pension checkoff. which as long as the government continues to pay a pension, there should be no problem. So our portfolio at risk is low. So we've not seen an increase in defaults because of the nature of the business that we have here. Even in Uganda, where business has slowed down, there our entire business is government payroll checkoff, and government continues to pay civil servants. And we do have insurance against retrenchment and redundancies. So our business is a little bit de-risked from the effects of COVID-19. So what have we seen? We have seen a slowdown in loan uptake because even the loans, in SME lending, sometimes when we talk of personal loans, and we've had a long conversation, even with donors and others who like to support the low-income people. When somebody takes a personal loan, you'll find that more than 50% of the time is actually not for personal consumption. It is actually for a business. They're stocking their kiosks, they're buying animal feeds. So I would say we have seen a slowdown even on the pension loans, because usually they use the money for their small enterprises in the rural areas. Some of the value chains in the agricultural sector were disrupted for a little while. I believe the value chains are coming back on stream. So there was a slowdown in loan uptake. Even for the employee loans, we have a few employee check-off companies. It's not that the staff were laid off, but people have become cautious because they don't know what will happen to their jobs in the next few months. So I would say the people, particularly in the hospitality industry, have been severely affected. So to answer your question, Sophia, whether it's a survival mode or whether we can forget about profits, as John Ngumi said, there are some who are in the right sector at the right time, and as Mike Monari said, those who have diversified to go into making masks or taking advantage of new opportunities that have presented themselves, those are going to make profits and they're going to thrive. Mm-hmm. So I think the challenge for business owners and leaders in the SME is to really basically re-strategize your entire business. We are fortunate in Kenya that our IT, the IT platforms and e-commerce platforms are fairly well developed, and it's really to aggressively upscale those technologies and the infrastructures that are there to enable businesses to do business differently. Switching more to online business, switching on, and just taking advantage of the new opportunities that present themselves. So for some, it is survival. For others are seeking new opportunities, and some will make money, maybe not this year, maybe next year. And some are, and many of us are also re-looking at our whole cost structure. Why do we need office space? We have survived in our Kenyan office with 24 staff without a single person going to the office. I'm here at home, and I'm able to approve loans, even loans for Uganda customers. I can do them, from home. I can do them from my mobile phone. So you start beginning to question that infrastructure that we are carrying. So it's forcing people to rethink, partly to survive, but also maybe COVID has forced people to think of a different way of doing business. So I think that's what I'd like to say for as far as that is concerned. Maybe my colleagues have other things to add.
Well, that sounds very optimistic, and in terms of at least the new way or the new approach of looking at the pandemic and what it could bring. There's always an upside, right? And that's what you just say. And from your own company perspective, I think you probably have also been you have diversified enough that you could survive it from FinCredit point of view, if not the entire.
Well, I think we were lucky, Sophia. I think we've been lucky because there was a time 2-3 years ago when we were doing a lot of trade finance, and we had very big contracts with the likes of basically invoice discounting for dairy farmers supplying KCC, new KCC, which ended up being a bit of a disaster towards the end. But had we been caught in that type of SME lending, there was a time where we had a big program on asset financing for computers and laptops for SMEs. Those types of businesses or that type of lending, unless it's de-risked, and I don't know whether we're going to talk about it later, and Mike and John, and I'm sure Pamela can contribute about this this program that is coming up with the credit guarantee scheme that the government is putting together, that basically will help to de-risk. So part of the risk will be taken up by the scheme. So if I come to Pamela and I say I want a loan of 500 million, maybe the scheme will say they will take the risk of up to X amount, and she only has to carry the risk for the remaining. I think those kind of schemes are going to be very important to enable business SMEs to weather the storm during this period. And we don't know how long it will take. Maybe it will be another 6 months. Who knows? One thing I would like to say just before I finish, if you drive around Nairobi now, and I think my colleagues who are now in Nairobi, and now that the hours have been extended to 9 p.m., actually you will not see any difference. If you go to the more in the informal business sector, if you drive through the peri-urban areas, business is so, there's such a hive of activities. It's as though COVID never came. I don't know what your views are for the rest of you. It's, you know, I was in Ruaka the other day, and then I went to Kangemi, I went to places like that, and it's full of business activity. People are wearing masks, or at least some of them are, but it's as though nothing happened. And to me, that's a positive thing, to see that business activities are continuing. It's not like Europe or the West where you had total lockdown. So I think that's going to help as well.
Okay, let me revert to Pamela. Pamela is the head of business and marketing of Credit Bank of Kenya, a very key bank. So aside from the comments you may want to make on what John had said, I wanted to ask, banks in Kenya have announced a loan holiday for SMEs and its personal banking customers to cushion them against the economy disruption posed by the pandemic. So how do you envision this will affect the market in terms of recovery as well as bad loans? Are the banks still lending out loans as a result?
Thank you, Sophia, for having me. We are basically an SME bank in the market. We've been around, this is our 34th year of operation. And technically we lend to SMEs, but we also have other value additions that we do for our entrepreneurs. We are more in the medium scale of the SME part, so more the growing businesses, that's who we support. So we also have programs for technical capacity through our entrepreneur hub. So what the industry is doing, because we are also currently supported also by the regulator. There've been a lot of push by the regulator to ensure that we support businesses in Kenya. So they've reduced some our cash reserve ratios at the central bank, so that we can offload that funding to our entrepreneurs or our businesses. And the government has also been kind, the reduction in taxes and everything. There's a statistic that Mr. Ngumi spoke about that's actually quite worrying, because it is true that SMEs depend on cash flows, month-on-month cash flows, and right now that is not available. Even before, they were struggling with the cash flows and getting lending from, especially us mainstream institutions. So it's becoming something that it's even become worse now. So the statistics show that even 80% of the businesses could fall off, because Kenya is generally an SME market. And Mr. Kariuki spoke about all the informal markets that are still thriving, is because they really can't survive without that day-to-day earning that they require. So probably they're not worried about the social and the health impacts. They're more worried about the financial and even just living for tomorrow, because we are all affected by this contagion. So in our institution, we have been doing the restructures, we have been doing the refinancing of of facilities just to ensure that the portfolio at risk is reduced. We have been doing a lot of getting into the low-touch economy, because that's where we are headed into. Maybe Kariuki, that's what maybe the informal sector people should also be getting into a low-touch economy, so that we can social distance, yes, but business still continues. That's another way we can look at business. We're de-risking a lot of our business. In Ecobank, we've been de-risking for a long time now, because we have developmental financial institutions that partner with us to assist us in de-risking, whether it's Africa Guarantee Fund, Africa Development Bank, and even the Credit Guarantee Scheme will also come in very handy in terms of helping us de-risk and push more money out into the economy. So those are some of the things we're doing as an institution to ensure that our economy survives COVID-19.
Pamela, do you have a special program for women, SMEs?
Yeah, very interesting you should speak on that, because we are part of one of the African countries that is being that's getting technical assistance by African Development Bank for something called the AFAWA, Affirmative Action for Women in Africa. So we will be part of that, we'll be part of the institution that will be given funding to lend to women entrepreneurs at a better rate than, of course, what the normal mainstream financial industry would do. So yes, we are very passionate about women. It's one of the things I love.
Good to hear.
Yeah, so it's going to be very exciting in the coming months, because we'll be offloading a lot of this funding to women businesses in the coming months. Yes.
There you go, Michael. I know you have some agenda for that. Monari. Okay.
Thank you very much. We have a focus working with a couple of DFIs targeting youth and women. We are not very gender oriented like Pamela and her bank, but we tend to focus on tapping on various funds that are globally channeled around targeting youth and women. So more so to the ones who are in groups, we've got work very closely with institutions that target women groups, but there's a capacity building aspect of it, particularly from the incubation perspective, so that they grow up in groups, and then when they develop a bit, you fund them through small grants and build the capacity on how they can run their businesses. So yes, we focus on women as well.
Okay, that's great. Let me go to Erick. So he's not left out. Erick, maybe John was not there to introduce. Erick lives in Germany, but he also, he's the CEO and co-founder of a green tech capital. Maybe you can tell us a little bit about what your company does, Erick, and tell us also how the relationship with the SMEs and how you see that evolving, and any kind of work you're doing in that regard.
Thank you, Sophia, for inviting me. Hello, everyone. So Green Tech Capital is an investment platform. Our vision is really to try to tackle the financial gap that is related to SMEs and startup in Africa. I think that our organization is younger than most of the organization where you're working. We're only 5 years old. What we're doing is that we have 3 main business units. The first business unit is we have a venture building facilities that help SMEs operate and reach efficiency. We have an investment business unit where we invest in SME, but most of the time tech-enabled SMEs. And we have a financial service business unit where we have former professionals from the banking sectors that develop financial products or and does asset management. Well, what we see in general is that the gap for the financing SMEs in Africa is it's close like 300 billion. And that's why there is a need for so many organizations like those that are here today in order to tackle it in different ways. What we see is that we've been looking more in terms of the equity investment, and we know that from some of the startup and SMEs we're talking to, they have a challenge in terms of high rate that they can have when they have loan, etc. So, I mean, we know that the financing is a very challenging aspect, and the way we want to tackle it is to try to facilitate the opportunity of investment from actors that are not in Africa. Because what we believe is that there is a lot of opportunity investment in Africa, but unfortunately, there is not enough transparency for some people that are abroad. And what we're trying to do is to try to operate on the different aspects those different aspects in terms of, you know, supporting their operations, helping them structure the financing approach, giving them access to partners so that they can be more investment in Africa. When it comes to what we've seen regarding the COVID, obviously, like everybody, we've seen that there is a drop of liquidity, and because there is a drop of liquidity, and that you also have a lot of informal company that lives on the day-to-day. Of course, it's very challenging for the market in general. We see that most of the companies we've been working with or we have been invested are really concerned in terms of how they think that they can try to still find revenue vectors in the market. And they're also concerned about the fact that the impact of the confinement in Africa is way different than in Europe. And in that context, what we try to say and what we try to recommend is somehow to adjust to this new reality, because I think that you've asked John regarding the opportunity of this change of culture, but definitely I think there is because nowadays people are now taking more seriously the opportunity of digitalizations, because they have to find new ways to do business. They have to find new ways to interact with people, and also because, you know, the environment is definitely changing. We also see that there's definitely an inflation in terms of price. So, you know, the cost of living is starting to be higher, and that will not, from our perspective, that will not get easier over the time if the situation with the COVID doesn't improve, and that we still have some, you know, like lack of trust in terms of what you know, the fact that people will want to close the border, and then there will be less exchange in terms of business. And so we see there are some challenges, but what we see as an opportunity is definitely that it can definitely develop the local market in Africa, because you know, most of those informal sectors can now try to find most efficient and most efficient in terms of function and most cost-effective area to do business. And I think that doing business with local product, local partners, this is from our perspective a good way to mitigate what we see today within the context of the COVID crisis. So obviously everybody is looking at agriculture as being one of the key sectors, but I also think that because we have a lot of, you know, value chains that have some challenges, and that we now have the possibility through technology to somehow fix some points that are very challenging, or build new kind of infrastructure. I think that when I compare Europe with Africa, I think that we have more potential in Africa to go out of this crisis winning, because we're not used to, you know, we don't depend that much on this infrastructure. And when we look at the informal sectors today, it's really like, is the informal sector is going to be ready to embrace a new infrastructure that is more adapted to the continent, but that will come with innovation? Or are we going to try to hold on to old infrastructure that are not really functioning because they are not really stable, or they are not part of our of how the how the things are running. And so in general, I think that it's challenging, but I would say that I'm more positive for Africa than a lot of actors in general.
Or more than IMF or those institutions that predict the doom of Africa again. No, that's a very good analysis. I think you're still looking at the upside from infrastructure point of view, but at the same time, since it's like the time when the mobile revolution started in Africa, everybody jumped to mobile instead of building infrastructure for telephone that the West was doing. So what you're saying is because it's underdeveloped, the informal economy is vast. There is an opportunity to adapt to something new that's going to come its way.
Yes, so just one thing I want to add is that today when we look at the SME sector, you have a lot of SME that have traditional business model, and you have a lot of young companies that are, that the startups will bring in technology, etc. They try to leverage and somehow to bring the connection between this new way of doing things and the classical business. And I think that in the context of crisis, this is the best moment for SMEs to investigate what kind of innovations are close to their activities, so that they can leverage on some of the young Africans that already have the knowledge on how to capture this vector of growth and try to create some synergies. And I think that was not so much visible before because startups have been struggling, but I think that now it's a window of opportunity for this.
I completely agree with you. That was a good tip. I have to say, social media, for example, huge part of business nowadays, right? You agree with me. It's almost like sink or swim if you're not visible on the internet, and then the work you do and so forth, which is something traditional companies have left behind. And like John has said also, Ngumi, about the e-commerce and the infrastructure that we have to leverage and build and adapt fast. Large companies usually don't adapt, but small companies do. And at the same time, young people also understand. It's like in their DNA. They understand exactly how these things work. They just don't have the access to finance to be able to build their visions. So I think we can say we can focus on companies like Pamela's credit services should consider the innovative proposals that comes from young people as well and from fresh minds. One thing I wanted to ask, and anybody could answer this, is the African governments have had some pronouncements on the various interventions in terms of stimulus packages, right? Like PPPs and other things like they've done in the USA, direct loans, mortgage breaks and all that. So how is that stimulus package being treated? For example, if you can tell us how Kenya has done so far in that, did it really help the economy? What is the status of that stimulus package? Mike, maybe you can address that.
Thank you for that. Here the government has made some pronunciations and some aspects have impacted on the SMEs and the employees. For instance, on the tax front, I think the first presidential speech or second is announced some relief where employees who earn a salary to a certain extent are not supposed to pay tax. And you could actually see at the payroll I signed for the month of April or thereabouts, we paid less tax. So employees got a little bit more, and the SMEs also, there was a waiver. So some pronouncements have worked. We have also seen bigger ones. For instance, I think the budget that has just been read, the Kenyan national budget, has indicated that the hotels will be benefiting through a fund to help them get back to business in terms of rejuvenating tourism. And for the SME that is in that value chain, what I see, if hotels can reopen very quickly, we have clients who have literally shut down, people who are servicing the hotels, either through supplies of the foodstuffs, or a few transporters, the airport transfers that we've been working with, who work for various hotels. Basically, they are at a standstill right now. So if that stimulus package that is targeted to rejuvenate the tourism industry from hospitality right up to the part, any related value chain is likely to benefit. But I think what most of them are questioning, the SME, is that the how of doing this, the timing, the actualization is an issue that many are quite pessimistic about, because you don't know when the hotels are reopening, although there's been that pronouncement. And there are a host of others in terms of ensuring that some lockdowns that were there, I think some counties were allowed now to have a bit of movement, especially in the coast area. And we're looking forward to probably an announcement much later that people can be moving in and out of Nairobi. So those are some of the pronouncements maybe that could stimulate the economy back. But I'm sure people work very closely with government, like Ngumi, you may have some additions to make on this. But what I can say is that the SMEs are worrying that when will this be actualized, those pronouncements, other than the payroll, relief that you can actually see. I don't think there's anything else that has really impacted, but we look forward to it. Thank you. I think
interesting.
Maybe Sophia, I can add into Mr. Monari's comments. I think in the industry, the financial industry, over 360 billion shillings has been restructured in terms of financing. So I think that's also quite a relief to a lot of the people in the a lot of the businesses and personal households in the system. So that's quite a big amount.
Where did that money come from? Where is that coming from?
So one of the sources of the funds that what we got from the financial industry, what we are using to restructure, is the cash reserve ratio by the central bank was reduced by 1%. So that is going back into the economy, about 32 billion shillings. So that is where part of where the funds are coming from. Again, I say a lot of the development partners, the big development banks in the world, whether it's Africa Development Bank, are also putting in funding and helping the Kenyan economy. But there's also something I have realized across board, across Africa, that's what I can speak about, is the social, collective social economy of the people themselves helping each other, helping out, whether it is food banks, whether it is cash banks to the more affected parts of society. So there's also that is coming across, and yeah.
John Ngumi, you want to make a comment on that? Because I want to know, does the government have like a task force, an organized group that kind of looks down and see the SMEs versus this and that? I mean, is there like a sane approach to handling all this development partner money that comes through? And
so let me choose my words very. Let me choose my words very carefully.
I know, I put you on the spot. Okay.
The government has always had a policy focus on SMEs. It is translating that into action that is always the challenge. For this crisis, the government has been working mainly with groups organized around the Kenya Private Sector Alliance, to which I am an advisor, and also the Kenya National Chamber of Commerce. The intent is there, but there are two challenges. One is that the transmission mechanisms aren't that well developed. It's a pity that we haven't really exploited the potential of M-Pesa and other mobile platforms to directly put cash, so to speak, into the SMEs and others' hands. The second issue is a plain fact that the stimulus package is tiny in the context of Kenya. We are talking about, if memory serves right, let me just check my numbers here. We're talking about 53 billion shillings or so, which works out at 0.5 of GDP. You're looking at other countries who are throwing 10% of GDP at the problem. So that speaks to a particular African problem, that we don't have the fiscal space to come up with real numbers which will make that big a difference. So the salvation for SMEs is not really in direct benefit from a stimulus program, because the stimulus program is not large enough, and to be honest, government has taken back a lot of what it had given via taxes. Where the salvation for the SMEs comes in is in actually getting the economy working again. There is no big surplus coming from anywhere. Yes, the efforts that the banks have made are help. The credit guarantee schemes that John Kariuki mentioned earlier are going to help, but collectively, they don't amount to that effect that will move the needle. So it is really getting the economy working again, getting liquidity flowing, getting spending working, as Michael's talked about, the opening of the county borders. That is what will get us moving again. I'm afraid that is the stark reality. If we had the fiscal space, we would throw cash at the problem and let people spend that cash, but we don't have it.
So if I have to ask, what would be the top thing that you would think about for a business recovery plan?
Sophia, I think it will depend on the type of business and the industry, because I think the strategy will be very specific to the circumstances for that company. So a business recovery plan for somebody in the hospitality industry is probably going to be more long-term plan than a retailer or somebody who runs a salon.
I agree.
Yeah.
But we will all agree at least. Go ahead.
But I think if you, just moving on from what John Ngumi was talking about, the whole SME sector in general, it is really getting the economy working again. And so that liquidity is back in the market, etc. And even for Pamela, for her customers who are borrowing, as long as the economy is, as long as you remain on shutdown, as long as there's restriction of movement, you may know, Sophia, that in the greater metropolitan Nairobi area, we're still on lockdown, other than for commercial activity, etc. Until those restrictions are lifted, SMEs are going to struggle. That's my view. I don't know what the others think. Pamela?
I completely agree with you, John. SMEs are going to struggle as long as we don't create a demand policy for the goods and services. But I think there's room for innovation in terms of finding new ways of doing business, because the business should not change. Like, for example, your business in Kenya continues because it's digitized. But in Uganda, it's struggling because it's not really fully digitized. So the work remains the same, but we need to find other ways on making the business environment more agile and ensuring the services are, for people like us that can support the businesses. It's true that liquidity must be put in the market. The big corporates that are there, they need to keep paying the SMEs that depend on them on the value chain, because that's also usually a problem on how we can ensure liquidity keeps flowing in the market. So the demand policy must be pushed out, and everyone must play their part, because this thing is not just a thing of just one person. The government is doing its part, regulators are doing their part, the financial institutes doing their part, and the SMEs must do their part as well. So it's a collective effort for all of us.
But just the hardest on the SMEs, I suppose, everywhere around the world. Anyway, it's all interesting time for all of us. It's crazy, especially in the US and what's also in Kenya, All these riots and protests have So aside from the COVID, there comes another wave of contagion that really affects the economy. And we have no idea what the end of 2020 will be like. So it's kind of disappointing, but there's always an upside. So
We'll survive.
We'll survive, right? So we're all grateful and believe. Huh?
We will
Even
survive.
SMEs.
Oh, most
We're
definitely.
grateful to be alive to witness this. So it's all good.
The
Right.
SME sector will survive.
Oh, you
Individual,
are that confident.
individual SMEs may not, but this sector as a whole will survive because it's the backbone of Africa.
There you go. That's the conclusion. That's what we want to hear. Thank you. We've come to the end of our session, and I want to thank everyone for your great provocative conversations. And I'm sure the audience that will listen to it would learn a lot. What's on the ground in Africa. Our virtual session will be available on our website. You will be able to hear it. So I wish you good luck in weathering the storm and helping the SMEs in Africa. And they're a very critical part of the economy, and we all know that. Stay safe and good day to all of you.
Thank you, Sophia.
Sawa
Thank you,
sawa.
Michael.
Sawa sawa. Bye.
We have come to the end of our third crisis management conversation series on the impact of COVID-19 on SME financing in Africa under our campaign hashtag YourSay YourPart. The recordings, both video and podcast audio, are available on our WebForum site at www.webforum.dotconnectafrica.org. We thank our DCA Academy for sponsoring our WebForum and our partners for their support. Stay safe, share and keep connected, and together we will overcome.